Hey YouTube, this is Zach with Achilles Financial, and today I want to highlight Space, also known as Virgin Galactic Holdings, had an incredibly successful launch this past weekend where the CEO and founder Richard Branson actually went up in their spaceship all the way up to the edge of space, which the United States classifies as more than 80 miles above the Earth's surface, and they stayed up there for about 17 minutes before coming back down successfully. That was kind of the buy the rumor, sell the news type of effect, and you can see today, I'll put it on a year-to-date chart, where the stock has had a very strong year so far, but we had a very heavy decline today. You can see going all the way down to negative 17% on the day, or really it was a strong intraday drop. If you go to the one-day price chart, it was actually almost at $59 a share before market hours, and it declined all the way down to just north of $40 a share at market close. The reason why I highlight this is because this is a stock that has had a very volatile year. It's been a good one for covered calls, which we've talked about a number of times, but I really want to highlight that the key reason driving today's price decline was due to the fact that the company has decided to list an open offering or share offering, which is going to cause additional dilution in those shares. So let's talk about what a share offering is. First and foremost, what you'll see when you have a company perform something like this, they are essentially selling additional shares, so that will increase the shares outstanding. However, it's not always set at a specific price, but rather it's a limited amount of shares that they will be selling. So they are using the proceeds from these shares for general business purposes. Essentially, what they're looking to do is to utilize their higher price at this point in time to be able to go ahead and raise additional capital. So right now, if you look at the fundamentals for the company, you can see from an income statement perspective, they have been hemorrhaging cash because you can see that they really haven't been bringing in any income from an annual perspective. If we look at the quarterly numbers, you can see the past 4 quarters, they've had no revenue. So they are burning through cash because their net income right here is negative $129 million in Q1. However, if you look at their balance sheet, they do have the capability to weather this for a little bit longer because they're sitting on $617 million in cash and short-term investments. The reason why I highlight this is because with this $500 million, they're able to essentially survive another 1 to 2 more years if they're able to raise the money. So what does this look like, and why is this not great for investors? Well, let's go to the SEC filing. So what I have here on the screen is the actual SEC filing that you can find on edgar.com, which is where you can look at all the SEC filings. The important thing to note here is that they are looking to do a pricing up to $500 million, again, for general corporate purposes. They are utilizing Credit Suisse, Morgan Stanley, and Goldman Sachs to help them perform this offer. It's important to note that they don't get all of this $500 million, so 2% of the gross sales per share are going to be going to these agencies that are utilizing it. So that means that out of the $500 million that they are going to be raising, not all of it is going to Virgin Galactic, but rather that 2% fee you're going to be looking at right at $8 million is going directly to these agencies for going to various buyers and selling them the stock. That does incentivize the buyer or the sellers to go out and get the highest price possible. However, today showcases that the market was not willing to accept this much of an offering at this point in time. It's important to note that, again, this is a company that is currently pre-revenue. It's currently an idea, and so you have to expect that this is going to continue to happen. That being said, they also had a very successful launch this past weekend. The big thing to watch for this company is going to be therefore what, or what is next. This event this past weekend was really what everyone was waiting for, so now we just have to wait and see what the next expectations. Most importantly, when can they start producing revenue? So that's what we're going to be watching going forward. Just important to note that they are filing for additional shares, which will dilute the stock, which means if you are a current shareholder, you will have less voting power and your shares will be worth less today than they were yesterday just due to dilution. So if you have any questions, feel free to ask in the comments below or in the description. There is a link to my Discord where we go through a lot of various trades and talk about this type of stuff. So if you find this type of content helpful, please leave a like and subscribe. Thanks everyone. Talk to you later.